Alrighty, today's Tuesday, June 24th, 2025, and I am Jason Shapiro with the Crowded Market Report. So today we see a new all-time high close for the NASDAQ 100. I believe we see a new all-time high close for the QQQs. And you can look at the QQQ chart and call it a triple top if you want. And maybe it is, but I will continue to say this. There are three things that you like to see in a perfect world to have a good trade or a good risk-reward trade. One, you want positioning to be on your side, meaning you want people short if you're going to be long. You want psychology to be on your side, which means you want people bearish if you're going to be long something. And you want price action to be on your side, which means the market should go up on good news and not go down very much on bad news. That's what you want in a trade. And that is what you have here and continue to have here. You know, the positioning in the stock market has been favorable really ever since the April lows. We see that in the Commitments of Traders report. We saw it even more in the Commitments of Traders report that came out yesterday, where they spent the last week getting shorter. So positioning is on your side here. This is a piece of positioning that came out, I saw today, Global Fund Manager Survey, which shows the number one asset that people are underweight are U.S. equities. So no matter what kind of positioning data you're looking at, positioning is on your side here. And I know people want to say, oh, but look, the market's going up, so people are long. Well, no. And this has been probably my top message since I was in Jack Schwager's book. He asked me what my top message was, and this is it. Price is not what you want to be fading, okay? Positioning is what you want to be fading, right? Fading price is fighting the tape, okay? And that's what you're doing if you are bearish here. So positioning is on your side. Psychology is on your side. You can say what you want. People are too bullish because the market's going up. No. People are overall bearish, okay? And they got even more bearish because we had this Israel-Iran thing heat up, and we heard that, you know, in particular, if the U.S. were to get directly involved, how bearish that was going to be because Iran was going to shut the Straits of Hormuz, and that was going to spike oil to $150. Russia was going to get involved, and China was going to get involved, and this was all going to cause World War III. And Iran was going to, you know, bomb U.S. bases in the Middle East and all that. And people got very bearish on that stuff. Well, the U.S. did get involved over the weekend. And Iran did make a pretty shitty effort in bombing U.S. bases on Monday. And the stock market went straight up yesterday. So that right there is the tape telling you, right? And it's been telling you, because even during this whole thing, since Israel and Iran got into it, which was about here, the market hasn't gone down. Has it had a couple down days? Sure. But it didn't go down. It couldn't go down. What's going to make the market go down if that kind of fear is not going to make the market go down? So, lo and behold, things get a little better and the market then goes up because it couldn't go down on bad news. This is the tape. Positioning, psychology, market action. Those are the three things you want. Those are the three things you continue to have here. Does not mean the stock market's going to go up every day, but it means that the trend is up, okay? It's a bull market. Until proven otherwise, as I keep saying, it has not been proven otherwise to this point. You want to be long bull markets. You want to be short bear markets, right? Good things happen when you are long markets, that people are short, people are bearish, and that don't go down on bad news. Good things happen over time when you do that. And that, to me, continues to be where we are with the stock market. That's really it. For the rest of it today, you know, energy was down quite a bit as we continue to unwind. The people who had crude going to $150 a barrel now have to unwind out of those trades. So energies are going down. There's your unleaded gas Here's your heating oil. You know, these are pretty extensive moves because it's a huge unwind of what people saw as they needed to have on to hedge. Well, you needed it, you had it, and now you got to get out of it, right? The metals were not so good today. Silver was down quite a bit, although it came back quite a bit too. And, you know, silver is something that we do see quite a lot of long positioning in there. But it tries to go down and it doesn't, you know. And I personally am of the belief that it's hard for assets to go down because there's so much liquidity in the world, right? Central banks cutting rates around the world. China pumping liquidity. The U.S. has not cut rates yet, but expectations are that they will. This administration has clearly made it clear that they want to provide liquidity. This is all the central banks know how to do, and they will continue to do it. So this liquidity makes it very tough for assets to go down, right? Bonds didn't go down today. They went up. Bonds have been going up now since, the third week of May. This is when the world decided that no one was going to buy U.S. bonds anymore, somewhere in here during the April thing. They've held since then. Have they done great? No, but they've held pretty well, right? Look at the short end, where the most shorts are. Never hit those April lows, and it's now moving up. Again, I see that as a liquidity thing, plain and simple. And then the dollar, back to our regularly scheduled programming. The dollar tried to rally during the height of the Iran-Israel fear. And again, now it's going back down because anyone who bought the dollar as a safety trade for that now is turning around and getting out. The yen was the weakest thing during that period, and now it's rebounding the most. Aussie's almost back at all-time highs, Euro, not all-time highs, I'm sorry, but highs for this move. Euro, back to highs for this move. So the dollar continues to be a very tough thing to fade, although you talk about psychology. We know people are hugely bearish dollar here. We know that. Positioning, Euro, yes. Yen positioning was extreme over here, has gotten less so. But the other one's not really extreme. You can see this British pound. The positioning is not extreme as it was here, right? So, Swiss is not as extreme as it's been in the past. So Swiss a new high today too, by the way. So I wouldn't call positioning to be massively one-sided in dollar, although psychology probably is. But again, the tape is not good. I mean, sure, the dollar went up when people were freaking out, but that's sort of good news for the dollar. So it went up a little bit, and then it goes down a lot. So the tape's not good. The positioning is not totally favorable. So we don't have the three pillars. We have one pillar. So the trade's very hard to do. The only place I see where we have the three pillars is the stock market, and that's what's working, surprisingly enough. So that's really it here. That's what I'm seeing, I hope everybody understands what I'm saying. I hope people aren't getting bored of me saying the same thing again and again, but these are the things that I know. Okay, so these are the things I can pass on. I'm not going to sit here and tell you what Iran's next move is going to be, because I don't have the slightest clue about that. Nor do I care as a trader. Do I care? What I care about is, here's the move. How does the market react to whatever the move is? That's what I care about. And to this point, the stock market in particular has reacted very well to bullish news and has not done very poorly on bearish news. That's a bull market. And like I say, I will stick with that until we see signs of something else. Okay? And that doesn't mean the first down day in the stock market is a sign of something else. Let them come out with, world peace and the market go down. Let them come out with they have fixed all of the trade issues around the world and the market go down. Then we can start talking about a different market action and a different tone, right? But until then, it's bull market. Okay? All right, so those are my thoughts. Hope that helps. Check us out, crowdedmarketreport.com, and we'll catch you tomorrow. Thanks. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, you know, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, you know, give it a shot. All right. And we hope to see you there. Thanks.